Hello and welcome to Car Dealer Live. My name is James Batchelor and today we are talking about, well, what a lot of dealers are experiencing at the moment, and that's supply challenges. But what's going on and how is this continuing to affect the used car market? Well, joining me to chat more about this is Auto Trader's Director of Commercial Products, Caroline Edwards-Smider, and Letta Pearce, CEO of Dealer Auction. Hello, both.
Good morning.
Hello. Hi, James.
Lovely to have you on. Thanks so much for joining us today. Let's get stuck into this because this is such a big issue at the moment. Letta, let me start with you, if I may. Now, a bit of a recap for viewers. I mean, you're the CEO of Dealer Auction, a trade-to-trade joint venture between Auto Trader and Cox Automotive, and it launched January 2020, I believe. And of course, that was a few months before
2019. Yeah.
2019. Sorry. So a bit of time before the first lockdown, but not a huge amount of time really before the world pretty much turned on its head. A very different picture now to how you started. We've got so many supply issues at the moment. I mean, what kind of challenges are you seeing from a trade perspective at the moment?
Well, James, I think firstly that sadly demand is definitely outstripping supply right now. As an industry, we're definitely seeing more dealers competing for less stock. So there's definitely that challenge that people are facing each and every day when they're trying to source. I mean, if we consider a fairly normalized ecosystem, we would expect to see vehicles flowing through from OEMs, fleets, and rentals. And in turn, this would obviously help stimulate more part exchanges in older vehicles to feed the independent market. But due to the impact of the pandemic, in particular new car supply issues, this flow has been disruptive and the volumes have subsequently decreased.
Yeah. And of course, I can
give you some examples if you'd like. So, with regard to the competitive nature of that trade environment, we've seen a 30% increase in bids per vehicle since April, with 25% increase in bidders. And we were a pretty active platform to begin with. So it's quite a dramatic change. I mean, luckily, because we've done quite a lot of work to bring on new vendors and stock, we've only seen marginal impact to stock availability. But as you can imagine, conversion rates are really, really strong and performance is peaking. So there's definitely a lot of impact into what dealers can actually bid for, and then the competitive nature of that bidding.
Yeah, and the amazing thing about all of this is the fact that you've got this increased activity, increased bidding, and of course at the same time prices are going up as well. So it's quite an extraordinary set of circumstances we're finding ourselves in. Now, Carolina, I mean, is all of this being reflected in what you're seeing in with levels of available retail stock on Auto Trader?
Totally. So what we are seeing on Auto Trader is plenty of evidence in shortages of supply. So the levels of used car stock have been lower this year. In August, so the latest full month of data, we've been down 3% year on year, which may not seem like a lot, but bear in mind that last year was also highly constrained market when it comes to supply. But there are quite different trends depending on different segments of the market as well. So vehicles which are younger, aged between 1 and 5 years old, are the ones that are being hit the hardest. And I don't think it's surprising for everyone. So first of all, as a result of COVID, various lockdowns that we've been through over the last 18 months, couple of years, as a result of all of that, we have seen just less new cars being produced and less cars being sold. This means there is a knock-on effect now on the used car market, with supply levels of those 1 and 2 year old cars right now seeing the largest decline. So this segment 1 to 3 or 1 to 2 is down by over 30% if we compare March to August this year, so quite significantly down. Then there is a separate trend impacting 3 to 5 year old cars, again, like, mid segment, which is also falling. And this is because of the new car registrations trending downwards pretty much since 2017. So that segment of the market, again, down around 25% over similar period of time. Now, so the 1 to 5 year old segment is affected the most. There are some positive movements as well. So if we look at nearly new stock, it's actually marginally up 2% if we compare versus March. And then all the stock is just doing really well when it comes to supply, and it's up by double digits. So overall, it's not all bad news. When we look at different body types, SUVs are the ones which are suffering the most. This is the sharpest decline that we are seeing. This is very much in line with consumer demand levels that we see on Auto Trader, because SUVs have been consistently the most in-demand body type this year. Then one more interesting trend that I wanted to bring up is looking a little bit more broadly. We are starting to see some evidence of a retailer market changing shape slightly. And a lot of that is very much driven by the shift in stock profiles that we've been just talking about, and age profiles as well. So when we look at dealer website traffic, we are seeing that independent retailer websites, unique users, were up by 7% if we compare first half of this year versus last year, so positive growth. However, franchised are being down again over the same period of time, so they've been down by about 2%. And consistent with this, since the pandemic, what we've also started seeing is independent share of total sales is moving ahead of franchise. So there are certainly some broader shifts happening in the market as a result of different supply constraints, different stock profiles performing better than others.
I mean, Caroline, is it fair to say that normally, pre-COVID, in a normal market, we'd be experiencing seasonality, wouldn't we? There'd be certain cars which there'd be too many of, and there'd obviously be cars that they're too short of. At the moment, it's pretty much everything, isn't it? Isn't it across the board? Is that what you're seeing?
I think that's right, but as I said, the older cars are actually doing pretty well. Like, this is where we are seeing growth. It's not huge, but there's definitely slightly different view when you compare very newer cars versus older vehicle segments. So there are still some opportunities in the market overall.
Yeah, and the clever dealers are spotting those, aren't they, and maximizing those opportunities.
Totally.
Yeah.
Really interesting, Carolina, what you say about the mix between franchise and independent dealers, because when we look at the activity we're seeing, a lot of the dealer auction customers historically were franchise dealers, and they just don't have the stock volumes coming back through part exchanges that they've had in previous years. So, we've had to really think much broader now about how, dealers can source that stock and where that comes from. You may be familiar with Auto Trader's recent initiative, which is looking at consumer sourced vehicles to give access to probably in excess of 30,000 new vehicles. I mean, these vehicles are acquired through Auto Trader's instant cash offer or through their guaranteed part exchange product. And historically, all of those vehicles were retained in the C2C market, so consumers selling directly to consumers. So I think, it's really important at this stage with those supply constraints that everybody thinks much broader in the way vehicles can be sourced and the channels in which they source those vehicles from, because the retail demand, as Carolina said, is still very, very strong. But without that opportunity to source those vehicles, they can't keep pace. Yeah. So, we're taking that stock, really. We're exclusively listing them on dealer auction with the sole purpose of making sure we're doing everything we can to bring more stock back to dealers much quicker than before. And it's definitely needed in this supply constraint market for sure.
Yeah, absolutely. I mean, Lieta, Can you just give us an overview of the what's fueling all of this? But because I mean, dealers will be very aware of it, but for consumers, they may be scratching their heads a little bit at this and wondering why it's difficult to get hold of a used car and why they may have to be paying more for it.
Yeah, I mean, it's very difficult, James, at the moment. Obviously, when we look at things, we've got the impact of the pandemic with semiconductor issues. So as Carolina said, there's very, very restricted new car supply. So when you look at that ecosystem, as I mentioned before, these vehicles should be flowing through, but they're not flowing through at the same pace. So OEMs, fleets, rental businesses, they're all having to extend contracts. They're all having to defer returns. So, there isn't as much stock coming back into those channels. And then subsequently, it's therefore not stimulating the part exchange processes between franchise and independent. So, the knock-on effect of the shortage right at the very, very start of the process is then being detrimental to the availability of stock as we get further down that supply chain.
Yeah. We'll come back to that point in a second about what the potential ramifications for all of this are in the future. But Carolina, let me just ask you quickly. You mentioned that there are still opportunities available for dealers. I mean, is the same true with profits? I mean, are profits still available in the market?
Well, definitely, and this is what we are seeing when we look at retail prices and what's happening in the market overall. So we've been seeing growth in retail prices for a very long period of time now, and we are hitting record levels pretty much month by month. So in August, we were up by over 17% year on year. So that's a very strong price growth. And as mentioned before, it's all very much driven by supply constraints and the record levels of demand, because that's what we haven't mentioned. Like, as well as the supply challenges, one of the main factors driving those supply challenges is incredible demand in the market. So in August, we saw 70 million cross-platform visits on Auto Trader, which is the second highest month ever recorded. And if you compare that to 2019, when it was more normal times, that's like 36% up. Like, it's huge growth, and it's driven by a few things. First of all, we are seeing increased demand for car ownership. We are surveying consumers all the time, asking them questions, trying to understand different trends. 26% of consumers believe that car ownership is now more important than it was pre-COVID. So more people want to buy cars. Then we have strong household finances being another factor. People just have more disposable income because they haven't been able to spend over the last couple of months. So we are seeing 50% of consumers feeling more confident in their ability to afford their next car, hugely important factor. And then there is a trend around increased vehicle usage more generally, and aversion to public transport, and that is driving users to move away from their typical journeys by public transport and just willing to drive a car. So all of those factors, in all of this challenging market, there's a lot of negative trends. Actually, this one is positive, like for the industry overall, because we are expecting a lot of those trends to simply continue. So that is driving used car prices being very strong. And I think for retailers, the market is super dynamic. The supply demand is changing, and I was showing some examples that it's not the same trend across all vehicle types. This is why looking at live market data, tracking those trends, understanding what's happening with different vehicles, knowing what to source, how to price, regularly repricing cars, there's plenty of opportunities to do good margins as a result. And we are seeing a lot of dealers having plenty of success.
Yeah, I mean, I really do think that we are going to look back at this moment in time, aren't we? And it's going to be much like the credit crunch over 10 years ago, it's going to be one of those moments, those pinpoints in history, isn't it? Now, let's just talk about the future, Lieta. Now, I mean, all of what's going on, it's going to have ramifications, it's going to have effects. So, I mean, what do you think the supply is going to be like over the next 5 years or so?
Yeah, I think it's definitely going to take a couple of years to get back to some form of normality as it used to be pre-pandemic. You know, we know that it's likely that the chip shortages aren't going to clear for the next 12 to 18 months. So we are going to continue to see those constraints on new car supply. So I think it's really important that, you know, we continue to focus on used. We continue to think about the factors that are affecting the supply in that market, and how we can really find alternative channels to drive that opportunity. So, for example, you know, we've now got independent dealers listing stock on dealer auction. There were 300 of them listed in August. And actually, the surprising element about that was that franchise dealers purchased a lot of that stock. So there is an opportunity for dealers to think very differently about their sourcing patterns and their sourcing strategy, and consider all of those different alternative channels. You know, we talked about C2C just before with the work that Auto Trader are doing. Now, normally you would see up to 600,000 listings in a consumer marketplace on Auto Trader. And if we think about how we can, I guess, maximize the opportunity that exists in that consumer to consumer marketplace, if we can draw those vehicles back into dealerships, it gives us an opportunity to create more momentum, create more supply, to fulfill that demand that Carolina is talking about. Because it's clearly frustrating for a dealer when demand is so high, if supply can't keep pace. So I think, you know, yes, you know, if you're a dealer, sometimes it's very difficult to go out to every single consumer individually and source vehicles. But if we've got this program of work, this initiative that allows us to, through Auto Traders initiatives, to bring that stock back through dealer auction, aggregated into one place, and take the pain away from dealing directly with the consumer, we can have a whole channel of stock that doesn't really exist as much today, because, as I said before, it's absorbed in C2C or it's absorbed by other car buying services. So those alternative channels, the utilization of digital, I think, you know, it makes stock more accessible quicker. And if we can continue to find ways to increase those volumes, dealers have an opportunity really to try hard to meet that demand.
Yeah, absolutely. Now, final question, it's to the pair of you. I'll come to you first, Carolina. Dealers listening to this, I mean, what should they be taking away from all of this? I mean, what should retailers really be doing at the moment?
My number one advice would be very simple. And as I mentioned before, utilizing live market data to help with sourcing, to help with pricing, making sure they have the right price vehicles at the forecourt, priced correctly, and just being able to spot those opportunities, because it's a very dynamic market. It keeps changing. Retailers need to be keeping up with all of those changes to be able to win in that market. My other advice is very much linked to what Lieta was saying just earlier around really reviewing different sourcing channels that retailers are using, and maybe thinking differently, maybe, you know, just trying to make it more efficient. And this is what we are trying to, at Auto Trader with dealer auction, trying to achieve through our guaranteed part exchange product as well. We call it GPX. So the product is designed to not only provide better quality leads to retailers, but it helps. It's a great source for profitable stock, which is so important in the current market. And as part of the GPX proposition, we're also giving retailers to this broader access of consumer stock, again, mentioned by Lieta before. You know, like, we're trying to get those cars directly to dealers, especially at times when it's so hard to get the right stock at the right price as well. So a lot of, I think, opportunities there, but there are things that retailers might want to think about doing a little bit differently.
Yeah. And Lieta, the same question to you. I mean, what are your top tips?
Yeah, I concur, really. You know, I think the consistency that we've talked about in terms of how dealers are approaching this new dynamic market means they need to be adaptable and agile to the way things are shifting. And I think, you know, from the perspective of a dealer, it is about being open. It is about taking risk to look at new channels that they've probably not considered before, but minimizing that risk, as Carolina said, by using data, make smarter choices. So I would say, James, in summary, dealers need to continue to adapt their approach, which they have been doing, really well over the last 12 months. They need to continue to run towards that digital retailing because they need to meet the demands of the consumer. But I think to do this, they need to ensure that their trade activity, which underpins all of this, keeps pace. So they need to maximize those new channels, and they do need to use data to make the right smart choices.
Fantastic. Some really fascinating take-home points there. So Carolina, Liletta, thank you so much for coming on today.
Thank you, James.
No problem, James. Thank you.
Well, that's it for today's Car Dealer Live. See you again very soon. Bye-bye.